Sandra Navidi. She is founder and CEO. There she is. Hi, Sandra. I hope you can see us.
Hi, Sandra.
She is founder and CEO of a consulting firm, BeyondGlobal. She's worked as an investment banker. She's a registered attorney in Germany and the United States, and she's an author as well. My first question to you, Sandra, is there anything you don't do?
Is there anything we don't do as the US?
No, is there anything you don't do? Is there? I was just being rhetorical there.
Oh,
yeah.
Well, I haven't quite managed to figure out what exactly Donald Trump is going to do.
We were really hoping for the $1 million answers on that one. But then, we want to talk to you about the trade deal between the US and the EU. There's a number of questions there and a number of potential learnings from that. But before I come to you, here's just for the benefit of our community, here's a quick montage of reactions that we saw after the deal was announced.
Let's pause for the moment and consider an alternative. A trade war may seem appealing to some, but it comes with serious consequences. With at least a 30% tariff, our transatlantic trade would effectively come to a halt.
15% is not to be underestimated, but it is the best we could get.
I'm not satisfied with this outcome in the sense that it's now good, but I'm simply saying that given the starting position we had with the United States of America, that more was obviously not achievable. In plain language, this means that the German economy will suffer considerable damage as a result of these tariffs.
So, Sandra, you heard a variety of views there. I mean, there's been Chancellor Merz talking about considerable damage for Germany, and there's also been criticism from other quarters, particularly from France, about this deal. Are these tariffs in the interest of the European Union, would you say?
No, I would say they are not. And I would not even call it a deal. First of all, a deal is an exchange, both parties give and take. In this instance, it seems like Donald Trump dictated the conditions. Secondly, nothing has been signed yet, as with so many other deals that Trump announced. And in effect, there's really nothing to go by. And thirdly, and perhaps most worryingly, both parties disagree about the terms. So the only thing that seems to be clear at this point is that there be a baseline tariff of 15% on most goods, but what exactly applies to semiconductors or pharmaceuticals or steel, for instance, is in dispute. Both parties have published statements which contradict each other.
So what does that mean? I mean, you had Ursula von der Leyen sitting there with Donald Trump and saying that, okay, this is the framework or the deal that we have. So what you're saying, everything is just hot air, nothing's been decided, there's going to be no tariffs placed on the European Union, is that it?
Well, I think Ms. von der Leyen gave Donald Trump something as a negotiating tactic, which was she let him get away with big headlines. For instance, that Europe would spend or invest $750 billion over the next 3 years into U.S. energy. From many perspectives, this is just not feasible. It's not going to happen to that degree. Secondly, also the obligation, presumably, of spending or investing $600 billion from the EU into the US. There's really no mechanism as to how to do that. Howard Lutnick, the trade minister, was asked regarding that, and he claimed that he received a list of companies that would invest in the US, but that's not legally binding. Companies can change their minds. There's really no way that the EU can force companies to invest here. So there's a lot of uncertainty still, and just generally speaking, I think, yes, the EU was under pressure to come up with some sort of agreement, because unless there is at least a baseline tariff, nothing's going to happen. Companies won't invest, they won't build, they won't export. So that was a problem. But this presumed certainty is relative, because Donald Trump can change his mind on a whim. And that is something fundamental that has changed in previous times. First of all, parties abided by rules, which Donald Trump doesn't. He wants to change the rules and wants to dictate them. But secondly, he had a panel of experts in the Treasury, in departments who would advise him. But everybody has been saying, and also CEOs that I have talked to who have been to Washington, the only person who decides what's going to happen is Donald Trump. And if he changes his mind, there's really no reining him in, neither by Scott Bessent nor Lutnick, who basically does rubber stamps everything that Donald Trump wants.
So basically the message to other countries that are looking on is that we cannot trust what comes out of the mouth of the US president. What is here today may not be there tomorrow. Is that it?
Yes, that's it. Of course, parties have to try to negotiate the best deals and then stop and go. And maybe you find Donald Trump when he's under pressure at home because of the Epstein files or something that puts him in a position that he wants to give something just to get something done. That is all within the realm of possibility. But I think the lesson for the future, and by the way, I was at the World Economic Forum in Davos in January, and the mood among CEOs was decidedly giddy. They were so excited in view of, new tax laws and deregulation. And also European CEOs were optimistic, even if cautiously. And I said in a talk show in Germany, I said, people, you have to be in an emergency mode. Donald Trump is going to attack economically, politically, and you guys have to do everything to become independent economically, but also that's very important and also in dispute, by the way, when it comes to digital services.
Stephen, is emergency mode, is German industry now in emergency mode? We were talking about Porsche and Mercedes earlier.
I think they have a lot of questions. I think what we've heard initially is that they're happy to have some sort of certainty. They believe the 15% gives them that kind of certainty. In certain branches, such as machinery, where Germany traditionally has been a major exporter to the U.S., this could be things like lasers. It could be, automation technologies that go into factories, very specialty developed sort of machinery. Oftentimes, there is no other provider really outside of German companies, and so U.S. companies will have to pay those prices. That being said, there are more and more competitors in China, for example, so they can't look at this and say, well, automatically someone's going to pay that price. It does cause stress. With the auto industry, it also causes other forms of stress, and especially if you look at the German government in particular, if it looks at the auto industry and what this 15% import tax would mean, essentially, that's what a tariff is, then it essentially means that there's every incentive for companies to invest more in the United States instead of building out in Europe, because immediately they have a 15% surcharge on top of whatever they move over there. So that is a problem if you're concerned about deindustrialization, if you're concerned about losing German jobs. And this, of course, applies across Europe to other fields as well that are hit by this 15%. So there is, again, on the one hand, a bit of acceptance that, okay, at least we have certainty because, as was alluded to, there was so much uncertainty that prohibits investment, that prohibits people from putting money in the right place, making decisions. But 15% isn't necessarily a great thing. Yeah.
I want to just jump in because there's a couple of interesting comments. One responding to Stephen, actually, from Davos, who knows, he says, I know so many people that aren't making big purchases and really tightening their spending in all areas. Davos lives in the States. And then just one more comment, which actually we could put to our guest, Sandra, there. Nile Chaturvedi says, not one economist can explain what's the end game of Trump. Tariffs have risen from 2 to 3% to 18% in the United States. What business can absorb that? The only reason inflation hasn't gone up is because business preempted and imported. So is that actually the case?
Donald Trump's goal is to fill the coffers of the U.S. so that there is more money to be distributed upwards to the 1%. Trade and tariffs are very complex, and Donald Trump can't think around the corner, because otherwise there may be scenarios that just don't make sense. For instance, if car companies sell cars to the U.S. and there's a 15% tariff, if those same car companies produced cars in the U.S. and steel is 15% and car parts, depending on where they come from, have a higher tariff, then it may be much more expensive for cars to be produced in the United States rather than import them in the United States. So that doesn't make any sense. It hasn't been calculated for a whole slew of goods yet, but these are things that are also risky for foreign companies who previously thought, okay, we'll just go to the US, we'll produce there, we'll invest in Mexico and Canada so that we'll get our parts more inexpensively. But due to Donald Trump's unpredictability, that now is dangerous. It's just not a safe investment.
Can you tell us what the thinking in America is? I mean, you're somebody who interacts with senior leaders of industry. Donald Trump keeps saying that government coffers are filling up with all this tariff money that is coming into the United States. Do they have that sense of positivity and saying, well, money is coming in and ultimately the business environment will be much better and we will eventually prosper in the long run? Is that the feeling amongst business leaders in the US?
No, U.S. CEOs don't want tariffs in general. They don't even want tariffs to protect their industries. They want to be competitive, and tariffs are counterproductive when it comes to being competitive, because it takes away pressure to innovate and to invest. And so what you see in countries that are isolated is that their innovation rate goes down, while the goods that are not so good, say a washing machine, is more expensive because price pressure is also gone. There's just no competition. So that's a bad thing. How does Donald Trump get away with it? From the very beginning, Trump and the members of its administration have claimed, or at least implied, but in most instances outright claimed, that foreign governments, or at least companies, pay the tariffs. So when Howard Lutnick boasts, oh my God, we're getting $1 billion into the US and in our coffers, he could just as well say, hey guys, I just increased the taxes on you by $750 billion. I think that's the number that he quoted. So it's bad for Americans. Many Americans, at least Republicans who voted for Trump, believe Trump. And then also we've seen what he does in case it gets dangerous for him if the economy slows down. First of all, he will blame Jerome Powell of the Federal Reserve that it's due to him. He didn't lower interest rates. And also he'll point to companies. He has already said, look at Walmart, the profits that they made last year at your expense, and they're increasing prices because they're so greedy. So he's deflecting the blame from him to other parties.
What is the lesson here for Europe? And this is something I want to ask you, Stephen. So you said earlier that there is a bit of stability. In turbulent times, it at least tells you what tariff rate you're looking at if you're looking at these talks that are happening between the US and the EU. But long term, the EU, what does it want to do? It needs to continue trading with the United States. Is that strategy A, and is there a backup strategy? Does it need to talk to other countries as well?
The U.S. was the backup strategy, right? China was, if you're looking at Germany, for example, right? So the industrial leader in Europe, China was one of your main markets for exports for a long time. The U.S. was another. But after the pandemic, people in China stopped buying as much. There were more competitors in China all of a sudden for the things that you used to be supplying. They were supplying the internal markets there. So sales went down. And many businesses said, let's turn to the U.S., right? The economy picked up there much better after the pandemic. And so many, like Volkswagen, like other companies, really doubled down on the U.S. as the market of the future. And now suddenly that's not there anymore like it once was. So what do? What we've seen with this trade, with this framework deal, I should say, and again, we have to emphasize there still are a lot of question marks around it, is, if anything, it sends a political message to Germany, to the EU as a whole, about about the necessity of diversifying trade partners, first of all, but also making things more competitive so that industry will continue to stay in Europe, to stay in Germany. And this just adds to a drumbeat that was already there before, saying that, look, energy costs are too high. There is too much bureaucracy. The regulatory environment is not conducive for doing the kind of business that we need to do. And then the big one, the Herculean task, that sort of really is a real issue with the EU in general, when you look at every single, consideration of consolidation, is further consolidation. Can you consolidate? Can you make it easier to move money around all 27 member nations to really add your firepower together? Or are you going to make it so hard by having individual regulations, and then you have this fractured kind of continent? And that is really the big overarching discussion that some people think this will lead to. Is that making more progress, this further consolidation, or that kind of urgency could also maybe cause it to fray more at its edges. And so it's really a critical moment for the EU in a lot of ways if it wants to continue with the same kind of quality of life, with the same kind of business that it had before. It needs to diversify trade on the one hand, but it needs to make doing business in Europe also more attractive. And that's easier said than it is done.
I have so many questions. I just want to ask, go back to a sentiment that was expressed in some of the initial comments that you brought in. What does this mean for citizens? What does this mean for Europeans? I mean, those who work with companies, those who are employed. I mean, is there an opportunity here of companies innovating and hence you having access to better jobs? Or is there a fear that because of these tariffs, companies will have to lay off individuals and then there's going to be job losses? What does it mean at a very individual level?
There is concern about job losses. We have seen job losses in manufacturing, frankly. They have not been massive. They have mostly been spread out in a way that, let's say, they occur in the next coming years. They would be met with good severance packages. They are traditionally a bit softer than you might see in places like the US, where you would have hard layoffs. And they haven't happened in the kind of massive numbers that really cause eyeballs to really pop open. But they are happening. And first, it was because of China. It's still important to mention that China as a market is a really big issue for the EU right now. And also the US is being thrown in there as well. Now, we still can't really sort out how much less business is being done with the US as a result of these tariffs. They've been all over the place. A lot of deals have been suspended, frankly. It's hard to make contracts, to finish them, to go back and then readdress them because something has changed in the last amount of time. So it's going to be interesting to see what businesses, how they react to this and what it ultimately means. But yes, it is about layoffs, essentially. It is about the future of businesses. When reliable markets are gone, when China is not buying, when the US is not buying, and when there's not as much demand in the EU for products made in the EU, then who are you turning to?
And I'm just going to jump in as an Irishman, of course, and you'll know this. Ireland was firstly a small country, but in many ways, really, certain industries are massive there in relation to the size of the country. And of course, we're talking about a lot of these services industries. So there was a lot of concern, and the pharma industry as well. Sure. A lot of US businesses are based there. There was huge, and there is huge concern in Ireland that this could have been catastrophic for the country. Also, a little interesting thing is that, of course, just wanted to throw it in there to make things even more and more complicated is...
Go on.
The UK has a 10% tariff. The EU has 15%. Ireland is in the European Union. What about Northern Ireland? So Northern Ireland, which is, we're talking about Brexit as well. So that's a big issue and a big concern as well.
I just want to turn to you, Sandra. Sandra, thanks so much for waiting patiently while we're just sort of discussing the EU in particular over here. I just wanted to take from you on, given whatever has happened over the weekend and the conversations that have happened, the no deal that we have, the no deal deal that we have, where is the relationship between the US and the EU headed? I mean, it's been described as the most consequential trade relationship in history. Where is that headed? Is that fraying at the seams? Will other trade relationships take precedence over it? How do you see it shaping up?
Yeah, I think it'll be under pressure also for geopolitical reasons. It is still unclear what kind of relationship Donald Trump has with Putin exactly. He has now taken a harder stance in most recent days against Putin, but that could be shown. We don't know. I think he has an adversarial attitude towards Europe. He's not a good faith actor, so anything that is negotiated can't be relied on. And so I think, yes, and also all what's happening economically is happening against the backdrop of artificial intelligence. And what I'm hearing from Silicon Valley titans is that in the next year and a half, 2 years, artificial intelligence is going to make quantum leaps. So be that as it may, but it's going to be increasingly more integrated into companies. And what CEOs here have been saying with regard to Donald Trump's tariffs is that, well, if we don't have enough people because of deportations and everything, we will use AI more efficiently and increasingly going forward anyway. And I think there's going to be a big gulf between the two continents because Donald Trump has instrumentalized Europe's dependency on digital services. The International Criminal Court, he instructed Microsoft to cut off Outlook services and cloud services because they were looking into Israeli politicians, and Donald Trump didn't like that. And so that part of the court was paralyzed. They couldn't work. Microsoft is taking this threat so seriously that they have said that if they got directions from Donald Trump to, for instance, throttle services to certain companies or countries, that they would take legal steps. But that's just another example that shows us how dependent Europe is and how dangerous this dependency can become, and the necessity to become more independent itself.
It's quite a reality check there from you, Sandra. And you also give us an idea for the future news desk theme, potentially the impact of AI on businesses, particularly American businesses. We'll leave it there for the moment with you, Sandra. Thanks so much for joining us this early on a working day from New York. Appreciate your insights. Thanks so much. Have a good day.
Thanks, Sandra.
Thank you for having me.